Hey guys, how's it going? Wanted to touch base with you briefly about this Fed action yesterday, when they made their surprise rate cut and they slashed their interest rates by 0.5%. I immediately started getting calls from clients saying, "Hey, does this mean my mortgage is now going to be 0.5% cheaper?" And I've told you guys many times before that that's not how the Federal Reserve rates work. They don't directly change long-term mortgage rates. What they adjust when they're adjusting their rate policy just has to do with the discount rates between banks, or what they charge banks who have access to their window for getting access to funds. Now, their policies eventually can trickle through to what I have, and they definitely affect things. And the things that they do definitely changes what's going on for mortgages, but it's not as fast or as drastic up or down typically. And in this case, them taking this kind of a relatively drastic action in between meetings, normally they make all their announcements and their decisions and they vote on their rate adjustments at the 8 times or so a year that they have their meetings. And so we were definitely expecting them to cut interest rates later in the month when they had their scheduled meeting. We weren't expecting it now. And the only other times that I remember them doing this, since I've been doing mortgages since the early 90s, were in October of 2008. You guys remember what was going on then? The markets were also in free fall. We had Bear Stearns and some of the other biggest investment banks that we had were in some serious trouble. And a lot of those companies that were real standards in American finance have ceased to exist because of bad decisions they made with regards to some toxic mortgage assets. And they were concerned that things would just keep falling and falling and falling. And so they did an emergency 0.5% rate cut in between sessions. And then actually they did another 0.5% at the next session. And the only other time that I remember them doing this was in September of 2001, right after the attack on the World Trade Center. And you may remember the markets closed for several days after that while they were trying to get a handle on what was going on. You remember air traffic stopped nationwide for several days there. The markets were closed. And when they reopened, the Fed also did an emergency 0.5% rate cut to try to help stabilize things and to let the investors and the investing public know that someone was going to take control of things and try to keep everything from getting just too nasty and what was going on. So what do we have here? The coronavirus fears and people not knowing how that's going to affect the economy moving forward, and all the lost production had markets just really taking a beating. Now, on Monday, things were a little bit better. Than on Tuesday, they're crashing again. And then Tuesday, they announced the big rate cut. And today, the markets were all up again. Now, what's also happened along with all of this is we now have our 10-year treasuries closed out the day at 0.99%, which is phenomenal. But mortgage-backed securities have not followed suit to that extent. And in fact, at the end of the day today, for most of my lenders at most tiers, rates were actually a little bit higher than on Friday. They've got to figure out what they're going to do with with just digesting everything that's going on and how things are going to be affected moving forward. So good news for you guys is you're going to see rates lower before the end of this cycle, most likely, unless they find some magic cure that takes care of all the coronavirus problems here in the next few days. We're going to be keeping rates low while they try to undo the damage that's being done to the economy. So if you have any questions, hit me up and I will let you know more as this progresses and as we have, ideas on the sorts of things we need to say about all this. So anyway, I am going to be at a big marketing conference tomorrow for mortgages. So I may be slower to get back to you if you have any questions on Thursday the 5th, but I will be back in the office on Friday the 6th. And we got a lot going on, guys. So good luck to us, right? Thanks for watching.